All right, so the week ended up being kind of a whimper. We started off the week with a pretty good move to the upside, finished the week with a little bit of a correction, small pullback to give back some of those gains. Not all of them. We finished the week higher, but still not really like pushing strongly to the upside. And of course, the big news over the course of the week was whether Nvidia was, with its 10% drop from Thursday's high point, was going to end up leading to something more and leading to more weakness now that we're through the June expiration. So we're going to break that down in today's video. Again, I'll be gone next week. I won't be back again until the next Friday, so that will be the next Market Outlook video is the following Friday. I guess that would be the 28th, so you can stay tuned for that. And I'll be able to summarize the week that was in that video. But mainly this week, again, you can kind of see, we'll break down kind of what's driving the news, so some different moves and some of these other asset classes that have had some pretty important effects, influences on risk appetite in general. Kind of usually two things that have been going hand in hand diverged this week, but again, not in a big way. So there wasn't any clear market making moves. Breadth again was an issue until the very last day. So I'll break down in the video kind of what that looks like and how likely we are to continue to have good breadth going forward from here, and the implications that would have on our bullish posture that we currently have. And then the discrepancy that we're seeing between the small cap index and the large cap index, and how much longer that might persist, and what what that might lead into going forward based off what we've seen in the past. And then our trade ideas, a stock in that large mega cap tech space that, unlike all the other ones, that had been pretty bearish for a while, but has had its kind of a bigger breakout move here on the last few days than what we had seen previously when it's made runs. So we'll talk about how to trade it. So let's go ahead and get started. Today is Friday, June the 21st, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, I invite you to subscribe to our YouTube channel. This icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos, and join our Market Outlook Facebook group that we've created. Alright, if you're watching us in our blog, check out some of these other things over here on the right, including our Market Outlook live video. Come down to the bottom, click this heart, it opens up this tab. Click that like button there. Same thing here, click this thumbs up icon, it opens up this tab. Hit that like button there. Again, the more you do that, it helps get our content out to all of our followers on these platforms. That's why we always ask. It's a big deal for us. So thank you to those who do this day in, day out. Those who don't, you can do right now while you're watching with one or two really easy clicks. Help us get to our goal of getting 100 likes on our Market Outlook tweet. Let's go ahead and get started and take a look at the S&P 500 with the market forecast indicator. As you can see, we got a bullish intermediate confirmation signal here. Down a little bit on Friday, but the intermediate line is still very strongly in bullish territory. Market sentiment line still rising in bullish territory as well. The intermediate line in the upper reversal zone, market sentiment line rising in bullish territory. It's been a really good week for the whole week here. You can see, well, it hasn't been a great week, but it hasn't been a bad week either. As you can see, we started off this 4-day week, because remember we had Wednesday off. And they're pretty much up. We started off the week very well, had the break, and then we started off the Thursday pretty well and been down, and that's what's brought the near-term line down. This last 2 days of weakness going into expiration pretty much brought the near-term line below the chart's midpoint, and the momentum line down into oversold levels for a second day. But again, not too extremes. The near-term line not in the reversal zone. So again, about as good of a bullish intermediate confirmation signal as we can get here, which it would suggest that we just bounce right off of this low point. Now we are already 2.5%, so there's not a whole lot of upside here. But as long as we can kind of, like we have been doing, just grind higher, then that's really all we need, right, to stay bullish. So that's what the S&P 500 looks like. The NASDAQ looks very similar, since that's kind of what is right now pretty much the S&P 500 is the NASDAQ 100. A little bit more of a drop on the near-term line into bearish territory, but again, the same thing. Strong bullish intermediate confirmation signal that we would expect would be a bounce. Now, we're 4% above the moving average, which is, as you can see, if you follow my cursor all the way along that horizontal line, it's a pretty high level. It's the 81st percentile for the past year. If you, again, follow along, you can see we were higher than that last November when we first started that intermediate run, and we've been this is about as high as we got here when we started this run back in May. So we might not get the biggest bounce off of this. We didn't drop very far like we did here on the last bullish intermediate confirmation signal, but again, you would expect at least a small bounce higher based off of that pattern down there at the bottom. Now, the Dow Jones and the Russell look a little different. The Dow Jones Industrial Average, the intermediate line, is rising, but it's not. It's less than 1/4% above the moving average. It is green. We have light green shading. We're not above the market sentiment line yet, but at least they're both rising. The intermediate and market sentiment lines are both rising, even if we haven't crossed above it yet. The near-term line did get into the upper reversal zone, did not really get the strong bullish levels, and the momentum line again failing to get up there too, which means it's not likely that the near-term line will stay there. And then finally, your Russell 2000. Again, didn't have that great of a week either. We ended up up a little bit, but not very much, as the near-term line did not get into the reversal zones, already back out of bullish territory. The intermediate line is still falling, is almost into the lower reversal zone again, and the momentum line in bearish territory too. Market sentiment line is pretty flat, passing through the middle of neutral territory there. And we're about 1.5, almost 1 2/3% below. So we have, 4 days now, straight days of dark pink shading and a red line. So all week long we've had a bearish pattern. So the Russell 2000 is clearly in an intermediate decline. It's not very strong, but it's an intermediate decline. The S&P 500, because of the NASDAQ 100, is obviously not in a bearish intermediate decline. It is still very, very bullish. Looking at the weekly chart, since we just finished this week here, and you can again see very strong pattern. The near-term line's up here, the momentum line's up here, or the intermediate line's up here, the market sentiment line's up here. The momentum line just barely missed being in the reversal zone last week. That's the 77th percentile. Otherwise, we would have had a cluster with the market sentiment, another weekly cluster. And obviously this week, with the very, very small range, the momentum line ended up dropping below the chart's midpoint. Looking at the Russell 2000, which remember is in a daily intermediate decline, its intermediate line is now out of the reversal zone, so you have pink shading. We did finish slightly above the moving average, so we didn't get a yellow line like we did last week. So that's how close we are to getting a bull tag on here. Now again, remember, bull tags can either be the beginnings of intermediate declines, or they can just be a bounce back up to the upside. The short-term sentiment's oversold. It's pretty strongly oversold, but not too extreme. But strong enough to obviously not, obviously produce this kind of pullback pattern here. Now the question is whether it will do what we just barely did a few weeks ago and bounce off the moving average essentially, and try to make up. So we didn't get the higher highs in that last bounce. And we'll see if this one will be able to. It appears unlikely that we would be able to. Your Dow Jones Industrial Average also not showing nearly as strong of a pattern, but better short-term sentiment on the weekly chart, as we did stay above the moving average here and almost 2% up above. The intermediate line falling, but still in the reversal zone, still above its market sentiment line as well, again on the weekly chart. And let's look at the other weekly charts that we tend to look at at the end of the week. It's very strong pattern here on the Hakinyashi. It's still very strongly bullish. It's setting up for a divergence, but as of right now, it's above its moving average. We are in the 92nd percentile in terms of how far away the 10-week is above the 40-week. In the past, however many weeks, it's been 3 weeks. We did get a higher high. We got a higher Hakinyashi close. The Hakinyashi close ended up closing above last week's high. So very, very strong bullish patterns there. Of course, the Russell 2000, not strong. It's been in the bearish pattern here. You got the red arrow. We're below the 10-week. The PPO's falling. You have negative. You're below the moving average down there. So very significant difference in that regard. We also like to look at the hull. So you can see the hull is turning a little bit bearish on the daily chart there. But on the weekly chart, it's still pretty bullish. Even if the PPO is not necessarily going up to new highs, it is up at a pretty decently high level. Again, IWM is a much different story as we're getting these bearish patterns. We have a 20-week hull that's red. The parabolic SARs have not flipped up again yet. There's still plenty of room down there for that to happen. But your candles are bearish. Your MACD is below its moving average as we head towards the 200-day hull again. See how close we get this particular go around. Looking at the 3 green arrow charts, you can see again 3 green arrows across the board, except for the Russell 2000, which has 3 red. Even the Dow's got 3 green arrows. Your Russell 2000 has 3 reds. You also just barely got greens on the S&P and the Nasdaq in the past few weeks on the weekly chart. Your Dow Jones Industrial Average does not have the 3 greens yet. It's still kind of in this convergence mode. And then you look at the Russell 2000 here, and it actually got 3 reds last week with that close right there. You got 3 reds in the weekly charts. We had 1 week of light pink shading, and we'll see if it turns anything more than that. But that's the only index out of all of these have gotten pink shading. And of course, the S&P and the Nasdaq has been green shading again for the past few weeks. If you look at the 3 green arrows spread out here, you can see the S&P is flirting with that 8-day moving average as the MACD is flirting with crossing below its moving average. Of course, IWM is below its moving averages. The 8 and 17 has crossed below the 30. The MACD is negative below its moving average, so Cassix is down in bearish territory, so clear bearish patterns from that perspective. Let's look at the DMI for the S&P, which is relatively bullish, even if the lines are moving back towards each other. You're still at pretty decently bullish levels, at least. That's not the case for IWM, but look at the ADX for IWM dropping below 10 for the first time. Again, that's about as big of a squeeze. Essentially, IWM is setting up for a bigger move, one way or the other. It doesn't get below 10. The ADX, if you notice, doesn't get below 10 very often. The last time it got below 10 was here in 2021, and we had a big move up to the upside before, or 2022 or 2023, excuse me. Look back over here, and we had it in 2021 before we had this fake out move to the upside, and then we started to the downside. Same thing here in earlier in 2021, we had a move down to a cluster after the ADX got below 10. So it's not common for the ADX to get below 10. It means that we've been really sideways for quite a while, but it does mean that we're set up for a move to come out, kind of a breakout move to come out of that pattern. The RSI and CCI are still strongly bullish for the S&P 500 and bearish for the Russell, but not strongly bearish. You're not below 40 on the RSI. You never really got below the 150 level significantly on the CCI, and we haven't broken the minus 100 level yet here either. So we haven't had the squeeze play out to a bearish pattern yet. Looking at the Ichimoku cloud, still strongly bullish from that perspective on SPY, but IWM, of course, is showing a neutral pattern right now below the cloud. Green line's below the blue line. We have a negative rate of change over the past 60 days. The Bollinger Bands. For the S&P, we have been flirting with the upper quartile of the bandwidth. The range rising after a breakout here about a week or so ago, but we are back below the lower Keltner channel. That might ultimately lend to a peak here on that momentum line. IWM, remember, has negative momentum down there. We are in the lower half of the bandwidth. The bandwidth is still really, really low. So again, we're setting up for a squeeze play, a play to break out the bands inside the Keltner channels, the band with very low compared to its 150-day range. At some point in time, we'll get a good, decent move. And as of right now, we'd have this to expect it would be to the downside until we can break up into the upper half of this and upper, potentially quartile of its Bollinger bandwidth. Looking at the intraday moves, give it a second here to load up. You can see a very, very small range sitting right on last week's high point there. You can kind of see the gaps in volume, especially from last Wednesday. That's there, that gap from last Wednesday. You still have a good bullish pattern on the Arun indicator as the negative indicator is dropping back down towards zero, and the channel is down there at the bottom is getting bigger. IWM channel is still really small, and you still have a bearish pattern here on IWM on the Arun as we are getting a lower high and a lower low on Friday, closing above Thursday's low, but closing, remember the SPY is right at last week's high. IWM is at the low end of last week's range, closer to its low, and again with the bearish Arun pattern there. Looking at the volumes and the trading range, volume picking up in the last couple of days of the expiration cycle, but the range still very small. So when you put those numbers in the context, the volume at least is picking up a little bit off of those extreme lows there, but the ATR is still still at least above the 80% extreme low point. Remember, once the range gets really, really small, then that tends to lead to a period of volatility when it starts to rise up again. So we'll see if that ends up being the case, especially with the VIX as low as it is, finishing the week on a relative down note, coming off of its highs of the day. The correlation with the VVIX is at still at strong levels. The VVIX itself at least closing above 80, as we'll see here in a minute with the VIX 3M. It's taking a minute to load up. There it is at the bottom. The VIX 3M, we are above the 85% mark, making a run here early in the week to getting below 85%, way below 85%, but then rising back up. Remember, the VIX itself is limited to the downside because you can only go to zero, and it just doesn't move very much when it gets this low. But the move that we've had over the past couple of days has gotten it back up above its average values over these recent time frames as it flirts with making a run up towards that 200-day again and potentially up above that 200-day, which I think is a likely scenario in the relatively short term. All right, now let's take a look at what's driving this action here this week, and you can see, again, this past couple weeks has been the Qs that have been doing so well. Not the case necessarily for IWM, which over the past 3 months still has a negative return, even though the Qs has a very strong positive return over the past 3 months. And that really, the divergence didn't really start until about right here, where IWM started to drop off to the downside, but the Qs kept going higher and higher. So big divergence there, and that's really what you see in this chart. You can see the Qs relative to IWM. Let's bring that up here first. There we go. And that's the move that we've seen here. This is a weekly chart. Let's go to a daily, and you can really see that move stand out. Sorry, my computer's going a little slow here. There we go. There we go. And then there's that move where the Qs have really taken off versus IWM right around May 20th or so. Was when it started to take off and was gone parabolic, pulling back a little bit now, but had gone really parabolic there. The RSI up to highest levels of the past year. I mean, again, the most parabolic move that we've seen. So that's been obviously the biggest driver. Interestingly enough, it's not just the Qs that have been doing well over the past 3 months. Gold. Now, gold had its biggest run early in this 3-month period, this rolling 3-month period, and has been flat ever since. Bonds were actually down quite a bit at the beginning of this 3-month period, bringing equities down with them. But now has been flat, and that's allowed equities to come off their lows in the past 3 months. And again, those continues, especially bonds and bond yields continue to be the biggest drivers of what's going on here. So let me pull up the 3 green arrow chart really quick. So let's pull this out to the 3-week chart. There we go. And look at TLT, which has been up over this past couple of weeks, but it's been holding up this week above the 200-day moving average at the point of control. MACD and stochastics moving higher in bullish levels themselves, but not necessarily continuing. They're kind of looking like they're peaking here, and you wonder if that's going to have an impact on TLT. Again, if you look at it from a weekly perspective, it had a great week the prior week, and then so far holding. So far, it's down on the week, but so far holding, and very, very low volume week as we're trying to get going to the upside. Now, remember the other big mover for risk appetite here that impacts risk appetite is the dollar, and the dollar has been, has had a couple of really good bullish weeks since the beginning of this current week now that we're on. The dollar finishing at, about a month highs, 1 month highs, getting closer to its 3-month highs here as it continued higher. Again, that's typically has not been bullish for equities when the dollar is moving up as much as it is and is in its own bullish intermediate run. When you look at its market forecast chart, you'll see it's on a bullish intermediate run here. Once it comes up, there we go. Intermediate line up into the reversal zone, crossing up above the market sentiment line. So again, that's the two-headed monster is the dollar and bonds, and so far the dollar has been strongly bullish, and bonds has been relatively decently bullish too, and equities, especially the Qs, have been able to do pretty well despite the dollar strength because of the bond strength. And we'll see that you can see the near-term line has been dropping, so we'll see what kind of near-term pullback we get. The last couple pullbacks we got down to the moving average. So far we're not even close to the moving average, but that's a very important driver. And of course the other big driver is what's been going on in the XLK, right? XLK has been a big mover here. It's up there with utilities for the biggest 3-month returns, about 8.8%. Everything else from the cyclical standpoint is down, kind of has some negative returns over the past 3 months. But you can see, as I've shown you before, the relative rotation graph pretty much remains XLK. Here we go. XLK has been the only one in the leading category on the daily chart, going up to the right. Everything else pretty much moving down to the left. You're starting to get a little turn up higher in industrials and financials, materials and energy, though that's the kind of cyclical area of the market that's more tied to kind of economic expansion from a kind of like a production standpoint. XLK, other than the XLK, XLC, XLY are both in the lagging category, and they don't look to be improving. XLY is the only one really that is improving, not with any momentum. It's losing momentum, but is gaining a little bit of relative strength, but still not very strongly bullish. And you see that reflected, first of all, you see the skew jumping back up again going into the weekend. Again, the demand for fat tail risk jumping up, but breadth remains. Breadth did jump up on Friday up to 268, but still kind of in neutral territory here, not breaking back above the 300, but also at least not breaking down below 200 either. And you can see the number of stocks above the 200-day moving average is above 300. Is back above its moving average. So a nice little finish to the week from a breadth standpoint. They tried to get breadth looking a little bit better as we fell below this moving average here, which tends to be bullish. When you fall below the moving average, you get a good run up higher. So breadth improved in the very end, the very last day. If you look at the McClellan oscillator here, it didn't jump necessarily to strong bullish levels, still negative, but at least it's not strongly negative either, as most of this week has been negative. But and we are approaching zero. So remember, typically we break below 500 during intermediate declines. We might be breaking zero here and still not be an intermediate decline. Remember, not on the S&P, The Russell 2000 is in its own intermediate decline here. All right, now let's take a look at our trade idea of the day. We'll take a look at Cisco Systems. You can see Cisco Systems ended up finishing the week with a bear tag. Very strong short-term sentiment run. In fact, out of all these bear tags we've gotten recently here during this bearish run, this has been the strongest near-term rally as the momentum line jumped up into extreme levels. The near-term line also jumping to extreme levels, and intermediate line crossing above its market sentiment. Out of the reversal zone, now almost 1% above the moving average. So a nice good change of direction here for Cisco. When you look at its weekly chart, eventually, I'll come up here in just a second. Let's see here. There we go, finally. We got a transition candle this week with the green arrow, so closing above the 10-week moving average. Remember, the transition candles are bullish when the actual candle is strongly bullish, and there clearly is. So a good transition candle for Cisco that suggests that we could be heading towards something more significant. You got 3 green arrows this week. Don't have the green line yet, so that's something, but we do have very, very strong moving volume. That's a good sign. When you look at the 2-line version of that chart, you can see breaking up above that 30-day moving average, which of course gets you the green arrow, and then also breaking, or close to breaking above the 50-day moving average. Your MACD and stochastics rising pretty sharply up towards bullish levels. You got the point of control still here, the 200-day moving average. So we're not out of the woods here. It's not like we're breaking out to a very strong bullish move. If you look at some of the other oscillators, like the DMI, you can see a good strong bullish breakout pattern there, above 30 on the positive, below 20 on the negative. In fact, that's the biggest positive result that we've seen in quite a while on Cisco, so that's a good sign. When you look at the RSI and the CCI, they also broke out to bullish levels, well above 50, above 150 on the CCI down there. Now the CCI still got a ways to go to get above positive 100 and really see. I mean, we've been below this minus 100 for a while. Never did change the trend to being above positive 100. So that's kind of what we need to see to get a good strong trend going. You can also see too, when you look at the Ichimoku cloud, we don't quite have a trend yet there either, but at least we ended the bearish trend that we had, as both those lines have the bottom got to 0. Still below the cloud, but above the green line. So small positive developments there. And then looking at the Bollinger Bands, you can see we were flirting with breaking up above the upper band all day until the very end of the day. We came back down, finishing a little bit below the band and below the Keltner channel. But your momentum is rising pretty sharply. It was pretty strongly negative. Now it's rising sharply. The red dots mean the bands are inside the Keltner channels, and that can change if we were to break out of both the bands and the Keltner channels, which appears to be a pretty decent probability that we will. So what we decided to do here was to do a pretty aggressive long call vertical spread, selling the 50, buying the 49. Gives us about a 3-to-1, a little bit more, about a 2.5, almost 2.5 to 1 reward to risk ratio for it. And then again, there's our flexibility. Again, it's a pretty aggressive trade, but that's our flexibility that we have to work with from a timing standpoint. As long as the maximum gain is inside of 1 standard deviation, we can be able to maintain this trade and give it the time it needs to get up there, knowing that we don't have, if it does fall out, and then we, at worst, will lose $500, right? Which is a very small loss compared to the $1,200 reward that we're shooting for. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread on this. Keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Join us at marketscholars.com for free. Follow and like us on Twitter and Facebook as well. Have a great rest of your week, everybody, and we'll see you all on Friday.